We're going to wait to see if that feed gets a little bit better. Alicia, let me turn that same question to you, though. If this is going to improve, at least on the seasonality alone, are you looking at a shopping list at this point?
So, Carl, it's a great question because I think many of us on the street are cautious in the near term because of the fundamentals that are coming at us very quickly and daily, and also the seasonality here. But we very quickly turned the calendar into a much better period in the fourth quarter, certainly by the end of the year and after this election that we've hardly talked about at all recently because of the volatility in other places, tend to have a better coming out of the year than you do coming into at the end of the third quarter. So I'd say this, what Jeff was starting to say is the time horizon really, really matters here because you have many companies now that are trading at 8 times earnings, 12 times earnings, and the estimates have come down and they've taken into the fundamental fact that next year is going to be a difficult year. To that extent, it is a buying opportunity for those kinds of names. We'd be selective here. But when the trade is all going in one direction, which is bearish, we all know that day is coming when it's going to reverse. That doesn't mean it's tomorrow, but it does mean it's on the horizon in the next 12 months.
Right. So if you're looking at names with high dividends and if you're looking at short duration, does that lead you to staples and utilities, or do you take a little more risk than that?
I actually think it's okay to take a little bit more risk than that. I mean, there are certain sectors that are really just been pounded. And I'm not talking about the speculative names or the names without earnings, but core fundamental companies where the historical multiple now has already come down. And some of that is actually in discretionary, because discretionary really took it on the chin when the cyclical sector sold off. So I'd look at that area. We love healthcare. I think the announcement this morning from Biogen is a great example of the innovation coming from the sector with historically depressed multiples here. Healthcare is a way to re-enter the market here for the next 12 months. And we do like select industrials here for the rearming and the reshoring in America, which is clearly coming as a result of the tumult of the last 24 months. So those are the areas we like. You have to be selective. You should expect some real volatility coming in the next few weeks or months. But I think we end the year on stronger footing, and you have to have a 12 to 18-month horizon. When you buy assets that are stressed, the history of markets are that in 12 to 18 months, you're doing much better.